And yeah, we certainly do favour developed markets over emerging markets. I think there's more certainty now as we move through this sort of post-COVID period. And in this part of the world, in other emerging markets, we're still struggling a little bit with stop-start type behaviours within the economy. So within the developed markets, we're seeing strong earnings momentum. We're seeing more certainty, more confidence. Particularly in the US, we're seeing share buybacks carrying us through strongly into next year. Good support from earnings, a bit of a restacking in terms of which companies we expect to do better than others in terms of price performance, but overall it gives us a balance leading towards developed markets.
Slowing China macro situation, Mark, does not necessarily mean you completely disengage from mainland equities, does it? You've got to be highly selective. What do you go for?
Yeah, absolutely right, Sri. I mean, you know, it's been an interesting period for those investors that have China in their portfolios. I think some international investors have been quite surprised by the impact that top-down policy can have on equity markets. I think those that have been involved longer understand the relationship between policy and shorter-term share price movements. There are opportunities. We've seen some significant drawdowns, of course, as a result of these policy changes. And it's in the environment of a fairly steep cyclical slowdown overall, which we are familiar with, of course, within the command-led economy. So coming in now, I think we see opportunities, particularly certain aspects of the tech sector where we're cautiously optimistic, where we see policy aligned or behavior aligned, strategy aligned with that top-down policy of common prosperity. So I don't think it's a case of leaving the sinking ship. I think there are many opportunities. We're allocating capital quite constructively, but we're taking our time. I think this is going to be, as we move through this downward cycle, I think economic results are going to continue to disappoint, and we're going to see a policy response at some point. We're already starting to see the right rhetoric around that, but it's too early really to say whether or not it's going to be immediate or we're going to wait a little bit longer. So I think investors will be cautious. They'll be taking account of the situation, but it's certainly an opportunity to reallocate.